All right, today we're doing something really fascinating. We're going to crack open the code and see exactly how a quantitative algorithm, a black box, actually analyzes and scores a stock. Every single investor asks this question. You're looking at thousands of companies, you're buried in news. How in the world do you spot the one that's about to take off? It's a mix of hard work, a little bit of intuition, and let's be honest, sometimes just pure luck. But what if you could take all the guesswork, all the emotion out of the equation? What if a system could just chew through all that data and spit out one single objective number? Take a look at this, 91.20%. Now, this isn't just a random number. This is a real momentum score for a real stock calculated by an algorithm just like the one we're talking about. It looks so precise, so confident, but where does it actually come from? Okay, let's dive in and find out. So that's our mission today. We are going to decode that number. We're going to unpack this so-called black box piece by piece so we can really see the logic and the math behind it all. The first thing you need to know is that this score isn't just magic. Think of it more like a recipe, a very carefully designed recipe made up of 8 different analytical ingredients. Each one measures a totally different aspect of a stock's health and momentum. And here they are. These are the 8 core factors. You can see each one has a specific job to do. You've got things like EMA crossovers to spot the main trend, average true range, or ATR, to check on volatility, and even volume analysis to see if the big institutions are buying in. But the most crucial part, look at the weights. They are not all created equal. And this chart just makes that crystal clear. See? It's not an even split at all. This algorithm is built on one core belief. Trend is everything. A massive 45% of the entire score, almost half, comes from just 2 factors related to something called exponential moving averages, or EMA. So to really get a feel for this, let's just zoom in on that most heavily weighted signal. Let's see what the algorithm is actually measuring. Okay, this is the heavyweight champion of the algorithm, worth a full quarter of the final score, the EMA crossover. An exponential moving average is kind of like a smarter, faster version of a simple price average. It gives more weight to what the stock has been doing lately, which makes it way more responsive. This factor is all about comparing the short-term 20-day trend to the medium-term 50-day trend. And the logic behind it is actually pretty simple. When that faster 20-day average crosses above the slower 50-day average, the algorithm sees that as a bullish signal. It's a sign that an upward trend might be starting. And of course, the reverse means a bearish trend could be on the way. But here's where it gets really clever. It's not just a simple yes or no. The algorithm actually quantifies the strength of that signal. So if the fast average is way above the slow one, by more than 5%, boom, that's a perfect 100 points. If it's just a tiny crossover, it gets fewer points. And if the trend is bearish, it gets a big, fat 0. It's all about that mathematical precision. The algorithm also looks at totally different kinds of data, like trading volume. This factor is basically asking, is there any real power behind this price move? You see, a big spike in volume compared to normal suggests that the big players, the institutions, are getting involved, and that gives the trend a whole lot more credibility. Okay, so we've seen the ingredients. Now let's look at how the whole recipe comes together. It's a very logical, step-by-step assembly line that takes us from raw market data all the way to that final score. So think of it like this. First, the raw data gets loaded in. Then the system does all the math, calculating those 8 indicators. After that, each of those results gets turned into that 0 to 100 score we were just talking about. And finally, those scores are multiplied by their own special weights, and then they're all added up for the grand total. And here it is. This is how it all comes together. Remember that 91.20% from the beginning? This is where it came from. You can see this stock scored really well on those super important EMA factors, getting 23.75 and 20 points from them alone. You just add up all those weighted results, and bingo, there's our number. The mystery is solved. So, we know where the number comes from now. But that leads to the biggest, most important question of all. Does this fancy mathematical score actually mean anything in the real world? In other words, does it work? Well, according to 3 years of historical data, there's a pretty clear correlation here. Stocks that scored in that excellent range between 90 and 100 went on to return, on average, over 22% in the next 3 months. And on the flip side, stocks with poor scores, they actually lost money. And this chart just hammers that point home. I mean, look at that difference. It shows you the dramatic split in performance between the stocks the algorithm loved and the ones it didn't. The data really suggests it's pretty good at separating potential winners from losers. Now, this is absolutely critical, so listen up. As compelling as that data is, no algorithm is a crystal ball. Past performance never guarantees future results. A system like this is designed to find high probability setups, not certainties. And remember, this is all for educational purposes. It is not investment advice. This quote, right here, really gets to the heart of this whole philosophy. The entire goal is to replace human emotion and gut feelings with cold, hard, objective statistical evidence and just let the numbers do the talking. So, we've seen how a really complex process can be boiled down into a single powerful number. It offers some real objectivity in a world that's filled with noise. But it does leave us with one final big question to think about. Can a mathematical formula, no matter how smart it is, ever really tell the whole story?